why the HECM's growth may depend upon Welcome to the Industry Leader Update. If at a glance you said that the growth of HECM endorsements in fiscal year 2021 was impressive, you'd be mostly correct. After all, FHA reported 49,207 federally insured reverse mortgages were endorsed in the fiscal year 2021, and that was an 18% increase from the prior fiscal year. However, one chart inside of FHA's annual report to Congress on the performance of the Mutual Mortgage Insurance Fund and also the HECM within it tells us a slightly different story. Over 20,000 of last year's 49,207 endorsements came from the refinance of existing reverse mortgages. Now, looking closer, we see that over 4 in 10 HECM endorsements in 2021 were the result of a HECM to HECM refinance, and those volumes of refis more than doubled from fiscal year 2020. Now, knowing that, it's natural to ask, so how do we expand our market reach, not just the mere number of HECM transactions done each year? The answer may be summed up in one word: inflation. While the likelihood of inflation was dismissed and poo-pooed by many in early 2020, especially financial experts and teleprompter reading celebrities on the news, it turns out that the minority of the dissenters were actually proven right, and how we wish their predictions would have been proven wrong instead. Inflation is surging, and where and when it actually stops remains to be seen. Also, despite a historic 6% Social Security benefit cost of living adjustment, which will be enacted in 2022, many retirees may still find themselves coming up short. That thanks to actual inflation and also the risk of continued price hikes. As a result, retirees are going to have to stretch every penny or find a new source of cash flow. Now, we expounded on the challenges of the Social Security beneficiary, even with the cost of living adjustment, and we did that in a mid-October episode of this very show. So how severe has inflation become? Just last week, General Mills announced a 20% across-the-board price increase of all their products. And year over year, the national average of gas prices increased by 42%. Last week's Thanksgiving turkey cost 27% more than it did last year. And most recently, I don't know if you saw this news, the dollar store announced their intention to increase their prices to $1.25. That's a 25% increase in prices at the now ironically named retailer. Now, while we cannot stop inflation, we may be able to find a creative means to help curtail its impacts. That should be the mantra of our industry as we move into 2022. On a more local level, you could begin to host local workshops or seminars on how retirees may be able to fight back against rising prices so they can preserve their quality of life during their non-working years. Get on your local radio station's talk shows, meet with financial professionals, submit articles to your local newspaper or opinion column, and say it again and again and again. Inflation is here, and it's real, and it may be here for quite a while. Ask, what are you going to do? How are you going to deal with it? What is your plan? Are you willing to reduce your standard of living in retirement? Those are the pointed questions you must be willing to ask prominently in your community and loudly. Now, while inflation is not transitory, the opportunity to reach retirees who suffer its effects are. Now, 2022 presents a potential win-win for both older homeowners and retirees, and the occasion for authentic industry growth and increased market share of the HECM. What are your thoughts? Leave your comments in the comment section below. And also be sure to share this video on your social media profiles. You can do that on LinkedIn, Facebook, and Twitter. We do have a YouTube page, and you can subscribe and also hit the notification bell. That way you never miss an upcoming episode. If you'd like to catch your reverse mortgage news, perhaps on your morning commute, we've got you covered there as well. HECM World Weekly is the nation's only weekly podcast for the reverse mortgage professional. That's it for this week. Thanks again for joining us, and be sure to return next week for more industry news, analysis, and, of course, we're going to give you our opinions as well. Have a great week.